This is your Wall Street wake-up call. Target is out with second quarter earnings that beat estimates, while revenue was roughly in line with forecasts. For more, I'm joined now by Christine Short, Senior Vice President at Estimize. So Christine, aside from the headline numbers, Target actually lowering its full-year guidance and comparable store sales down 1.1%. That was in line with estimates for the quarter. What did you make of Target?
Yeah, I mean, comp store sales is primarily what we look at when we get a lot of these retail reports. Yes, they were down 1.1%. That was in line with what analysts were expecting, but it was the first negative number for same-store sales since 2014. So we're a little bit worrisome there. I think more worrisome even than same-store sales was the fact that they lowered forward guidance, like you said, during a time in which they should be receiving, higher sales and seeing more growth with the back to school shopping season as well as the holiday season. So,
right, the second half for them is huge.
Right, I mean, for most retailers, you want to see them raise guidance because this is their big shopping season. However, to see same-store sales are now expected to be -2 to flat, to see that for the full year, they actually took what was previously the low end of their EPS guidance range. It's now the high end. So we're now looking for EPS of 436 to 476. Previously, we were looking for 476 to 496. So to see it drop that much, a little bit concerning. We know some of the weaknesses there, but we figured, if they give pretty decent guidance or even guidance that's in line with what they expected at the beginning of the year, then maybe investors will sort of forget about this.
All right, now also during the quarter, digital sales rose 16% compared to 23% in first quarter. Still a healthy increase, but Target obviously looks still, competing with Amazon very hard.
It's not enough. It's in the double digits, that's great, but I think analysts were hoping to clear that 20% mark, and they just didn't do it. Their signature collections, so kids, babies, wellness, style, that's their signature sort of categories. Those did see same-store sales increase 3%, but again, it's sort of flat year over year and even falling, so it wasn't enough to sort of move the mark for Target.
All right, and we should also point out that the stock is down about 5% right now. Let's also talk about groceries for Target. This is something they've been trying to really move into, something that Walmart has been doing a great job of. And groceries are less prone to Amazon competition, but I've been reading reports that say that people aren't going to Target for those smaller grocery-related trips.
Yeah, so dry groceries is something they've been trying to reinvigorate. It's something that they did very well with in 2014, but sort of dropped off. Walmart, we know, is doing very well there. They're introducing organic items. They're really sort of keeping up with even the Whole Foods and the Krogers and the full-blown grocery stores. So they've got more product innovation, and they have, more of an ability to kind of move in that area because they do offer fresh products, whereas, Target's just the dry grocery area. So that's something that they've allocated a lot of money to. They seem positive it's moving in the right direction, but for this quarter and for the rest of 2016, it doesn't seem like it's going to be able to move the needle that much.
Now, when you look at Target's results, does this worry you about the consumer, or are the headwinds we're seeing more sort of Target-related headwinds?
I think this is, look, I'll say this. The season's been sort of confusing. We haven't really gotten a clear picture on the health of the U.S. consumer.
Right.
The companies that we were expecting not to do well have actually done pretty well. The companies that were expected to be winners have sort of missed the mark. So department stores last week doing very well, the first time in almost years. No one was expecting to see that. Whereas home improvement retailers, both Home Depot and Lowe's, those have been really picking up because of the strength in the housing market, but we saw a drop this quarter. So both of those sort of missed the mark. That was surprising. Now the discounters, you're expecting to see them do pretty well. The consumer is very value focused right now, but now we've got Target not doing as well. Walmart, let's see what happens tomorrow. They are expecting year-over-year growth to decline, but like we said, they do have some strength in other areas. There's going to be a lot of focus on the Jet.com acquisition.
Yes.
So I don't think if we look at Target, we're really getting a clear picture of, is the consumer weak or healthy? It's just the consumer's choosing now, and they are deciding where they want to shop. Right now, it's not currently Target, but it doesn't mean they're not spending, because we still see them spending on large ticket items like autos, like homes, like appliances. They're just being picky with where they allocate their money.
We have more retail earnings this week. Christine Short from Estimize, thank you for coming by.
Thank you very much.
I'm Scott Gamm, and you're watching The Street.